I want to show you something that is going to genuinely bother you. Right now, today, the average American savings account is earning a 0.39% interest rate according to the FDIC. Let me show you what that actually means in real dollars. You have $20,000 sitting in your regular savings account. You leave it there for an entire year. You earn interest at 0.39%. That $20,000 earns you approximately $78 in 1 year. $78. That is $6.50 a month. That is the cost of a fast food meal. That is what your bank is giving you in exchange for the privilege of holding and using your money all year long. Now, here's the part that should make you put down whatever you're doing and pay attention. The best high-yield savings accounts right now are paying around 4% APY or higher, which would turn that same $20,000 into more than $800 in annual interest. Same money, same FDIC protection, zero extra risk. Just a different account. High-yield savings accounts are advertising rates 10 times higher than the average savings account, APY of 0.38% according to FDIC data. And here's the number that will genuinely shock you. 57% of Americans keep their savings in a regular savings account. Only 18% use a high-yield savings account. That means right now, the majority of Americans are sitting in the wrong account, earning almost nothing, while a better option has been sitting right there the entire time. Today, I am going to explain exactly what this account is, how it works, what it pays, and how you can switch before another month of your money earns almost nothing. Stay until the end, because the last thing I cover is the mistake most people make even after they discover this account. Before we get into it, subscribe to Cash Cowboy and turn on the bell right now. Every week, I cover financial information that directly affects your money. The kind of information most Americans never find out until they have already lost thousands. Subscribe and let's get into it. What is a high-yield savings account? Let me start with the most important question. What exactly is a high-yield savings account? And why does it pay so much more than a regular one? A high-yield savings account offers much higher interest rates than a traditional savings account, often between 3% and 5% annual percentage yield in 2026. But here is the critical thing most people do not realize. It is not a different type of account in any complicated sense. It works exactly like your regular savings account. You deposit money, your money is safe, you can access it whenever you need it. And it is FDIC insured, meaning it is federally protected up to $250,000, just like any regular bank account. The only meaningful difference is the interest rate. So why does it pay so much more? In many cases, traditional savings accounts are offered by brick and mortar banks, while high-yield savings accounts are available from banks and credit unions that operate mostly or entirely online. By not having to pay for physical branch infrastructure, they can often reward their customers with higher APYs. That is the entire secret. Your regular bank has thousands of physical branches across America: rent, staff, utilities, security. All of that costs money, and the way banks offset those costs is by paying you almost nothing on your savings. Online banks have almost none of those overhead costs, and they pass those savings directly to you in the form of a dramatically higher interest rate, same safety, same access, same insurance, more money in your pocket every single month. The real numbers. Let me show you what this difference actually looks like over time, because this is where it gets genuinely eye-opening. As of 2026, the difference between the APY of a typical savings account and a top high-yield savings account can be greater than 3.5%. Let me break that down by balance so you can see exactly where you stand. If you have $5,000 in a regular savings account earning 0.39%, you earn approximately $19 in a year. That same $5,000 in a high-yield savings account earning 4% earns you $200 in a year. If you have $10,000 in savings, a 3.5% difference in APY equals roughly $358 in additional interest per year. Compounded over 5 years, a 3.5% higher interest rate could earn you $1,949. Now scale that up. $20,000 in a regular savings account at 0.39% earns approximately $78 a year. $20,000 in a top high yield savings account at 4% earns more than $800 a year. That is over $720 difference every single year from the exact same money, with the exact same level of risk and protection. Over 5 years, that gap becomes $3,600. Over 10 years, compounding, the difference becomes even more dramatic. And here is what makes this genuinely frustrating. That money is not gone. It was never taken from you. It is simply sitting uncollected because your money is in the wrong account. Who is missing out right now? Here's the statistic I want you to think about carefully. 57% of Americans keep their savings in a traditional or regular savings account. Only 18% use a high-yield savings account. That means roughly 8 out of every 10 Americans with savings are in the wrong account right now. And here is something that makes this even more interesting. A recent Vanguard survey found that nearly 60% of Americans earn less than 3% interest on their savings, and about a quarter earn under 1%, well below the 4% plus rates offered by top high yield savings accounts. This is not a small group of people who missed a technical detail. This is the majority of American savers, quietly leaving hundreds or thousands of dollars on the table every single year, simply because nobody clearly explained that a better option exists. Given that the annual inflation rate is approximately 2.4%, leaving cash in a typical savings account earning 0.39% means you are actually losing purchasing power over the course of a year. Read that again. Your regular savings account is not just paying you almost nothing. In real terms, after inflation, it is actually shrinking the value of your money every single year. The best high yield accounts right now. Let me give you the actual current numbers so you know exactly what is available right now. As of June 2026, high yield savings accounts are yielding up to 5.00% APY. The top accounts include Varo Money offering up to 5.00% APY and Axos Bank offering up to 4.21% APY. Newtek Bank's personal high yield savings was selected as the best savings account in NerdWallet's 2026 Best of Awards, earning a 4.20% APY with no minimum to open and no monthly fee. Other consistently strong options include Ally Bank, Marcus by Goldman Sachs, American Express High Yield Savings, and Capital One 360 Performance Savings, all of which have established track records, strong customer reviews, and competitive rates. Here is what to look for when choosing one. First, the APY, that is the annual percentage yield. The higher, the better. Right now, anything above 4% is strong. Second, when no monthly fees, some accounts charge monthly maintenance fees that eat directly into your interest earnings. Avoid them. The best high-yield accounts have 0 monthly fees. Third, FDIC insurance. Make sure the account is FDIC insured, meaning your money is federally protected up to $250,000. Every account I just mentioned carries full FDIC protection. Fourth, minimum balance requirements. Some accounts ask for a minimum balance between $1,000 and $10,000. Many of the best ones have no minimum at all. Check before you open. And fifth, ease of access. Make sure you can transfer money to your regular checking account easily and quickly when you need it. Most top high yield accounts allow same day or next day transfers. How to switch here is the part most people overthink. Opening a high-yield savings account is not complicated. It does not require a financial advisor. It does not require closing your existing account. and it takes most people less than 10 minutes online. Here is the simple process. Go to the website of whichever bank you choose. Complete the online application, which typically asks for your name, address, social security number for identity verification, and a linked bank account to fund the initial deposit. Most accounts can be opened with as little as $1. Some have no minimum deposit at all. Once the account is open, transfer the money you want to start earning higher interest on. Your emergency fund, your savings buffer, any cash that is sitting in a regular account earning almost nothing. Keep your regular checking account exactly as it is for day-to-day spending. Use the high yield account as the place where your savings actually grow. That is it. No complicated steps, no risk, no downside. The only decision is how much longer you want to leave your money in an account earning almost nothing when a better option takes 10 minutes to set up. The mistake most people make. I promised you I would cover this at the end. And this is the one that costs people even after they discover high yield accounts. They treat it like a checking account. They move money in, then immediately move it back out for expenses they could have planned for. They never let the balance sit long enough to compound meaningfully. And they end up in a cycle where the account earns barely more than their regular savings simply because the money never stays put. Here is how to avoid that. Keep 3 to 6 months of living expenses in your high yield savings account as your emergency fund and leave it alone. That money is not for discretionary spending. It is your financial safety net. And while it sits there doing its job, it earns real interest every single month. Experts typically recommend setting aside 3 to 6 months worth of essential living expenses in an emergency fund, and a high yield savings account lets that money grow essentially risk-free. Any savings beyond your emergency fund, money you are setting aside for a specific goal, a down payment, a major purchase, a future investment, belongs in a high yield account earning real interest while you work toward that goal. The Americans who benefit most from high yield accounts are not the ones who move money in and out constantly. They are the ones who park savings there deliberately and let the interest compound month after month. Let me bring it together quickly. The national average savings account earns 0.38% right now. The best high yield savings accounts are paying up to 5.00% APY. On $20,000, that difference is over $720 every single year. Same money, same protection. Just a better account. 57% of Americans are still in the wrong account. Most of them simply because nobody explained clearly that a better option exists. Now you know. Open the account this week. Move your savings. Let it compound. That is the entire action step. 10 minutes, zero risk. Potentially hundreds of dollars more every single year from money you already have. Subscribe so you never miss the next video. Share this with someone whose money is sitting in the wrong account right now. I will see you in the next one.